Good morning, SMF MMTs. This is the monthly index of the S&P 500 with a 3-month buy signal. We covered it very well. In the short term, we are overbought. We have an options expiration. Everyone is going to be expecting this big spring rally. But what about this, SMF MMTs? How about a nice pullback to start the spring so-called rally that we've already rallied in anticipation? And one thing about that S&P 500, it's going to take the financials and the transports to get it higher. One of the things that we can take a look as the S&P futures versus fair value is we have a lot of things out on the wires, okay, because we do. And some of the things that are contributing to it today is that commercial banks has complicated or complemented its efforts. And commercial banking is a different kind of banking. There's lots of things that are going on in there. But I will tell you what has to drive the S&P up to my 1340 handle and 1345 and below that 13, right below that 1350 on the S&P is it will take those bank stocks, the financials that, you know, have been in a 3-year turmoil to be a positive catalyst to drive that S&P monthly chart higher. We'll be taking a look at that today because it is Wednesday and it is 6:24 a.m., 9:24 Eastern, 2/16/2011. We're going to open up, but I'm going to tell you it's an options expiration. February. And there will be battle. The battle is between the public tape and the market maker tape. Those are the floor traders on the exchanges that run and control it. That's what you are. So basically your game plan is, as always, is understanding that the broader community is very bullish, and there's a lot of bullish things about U.S. for right now at the time being. However, whether you're in bull or bear markets, you get deeply oversold for a long period of time, and you can get deeply upside, but deeply overbought. So what do I mean by that? Upside means you get overbought for an extended period of time. That monthly S&P buy signal is about the best thing the S&P has going for it. It hasn't been in a buy signal for a couple of years. They only come around so often. Every few years, the S&P and major indexes get monthly sell signals or buy signals. That's what the bigger, broader public community, hedge funds, mutual funds, advisory services, day traders, investors alike, they all look at the standard stuff here, and it's bullish for them. Okay? We make market in price every day. So what we do is that we're constantly analyzing the broader community of Wall Street and that public tape. And the thing about it is, from a contrarian view, is that the spring rally is a perfect time to start taking profits and bringing that cash register. Okay? You can argue the fact that the bulls say, oh, okay, well, what's good about the U.S.? Well, we said this 2 years ago. We would get to a compelling part where the asset in stocks, the allocation model, and the PE models that everybody uses out there, that they're attractive here at this level, so therefore we could go higher. Now, when we're in ripping bull markets, everything gets overbought and has to have a pullback. Short-term shorts and then buying the dips and selling the rips, because you have too many underperforming asset managers around the world, around the globe. They're not outperforming. No one could believe that we could go higher here, because every time it ticks higher, the media's got to come out and say, oh, it can't go higher. That's why we can climb what we call the wall of worry. S&P 500 pre-market futures update.